Assalamualaikum. My name is Muhammad Nur Haziq bin Nohidan and my matrix number is 068023F1062. Our group would like to present the company Transmil Group Berhad. I will first talk about the background of the company. Transmil Group Berhad is an investment holding company involved in a provision for air freight, aircraft engineering, and maintenance service. It prided itself on stellar operational and financial performance as well as a strong share price. The company was led by CEO Gan Bon Aun during its rapid growth in 2007. In 2007, however, Transmil was hit by an accounting scandal with allegation by its revenues and profit had been materially overstated as far back as 2004. Listed on Bursa Malaysia in 1997, the company ultimately collapsed after the fraud was exposed, resulting in its delisting, a significant drop in share price, and legal action against its executive, including CEO Gan Boon Aun and CFO Alan Goh Pan Hua. Next, I would like to talk about the governance structure for Transmil Group Berhad. The first structure is Board of Directors Tan Sri Abdul Razak bin Ramli. He was responsible for leading the board and ensuring effective corporate governance practices, expected to provide an independent oversight and strategic direction to management. However, he failed to ensure strong internal control and financial transparency during the fraud period. The second is Chief Executive Director CEO Gan Boon Aun. He oversaw daily management and financial performance for the company. He was later charged by the Securities Commission for allowing Transmil in submitting misleading financial statement to Bursa Malaysia. His dominant control over financial reporting reduced board effectiveness. The third is Chief Financial Office CFO Loh Chok Ping, responsible for preparing financial statement and reporting company performance, played in a key role in overstatement of revenue by hundreds of million ringgit between 2004 and 2006. The fourth governance structure is non-independent non-executive director Kwok Kun Ho. He represented the interests of major shareholder, particularly the Kwok Group, supposed to provide business advice and governance input, but failed to detect irregularities in the company's financial account. Fifth, independent non-executive director and audit committee Soh Chin Tet, tasked to oversee financial reporting and ensure accuracy of company statement. His audit committee did not detect the irregularities in the financial statement, showing weak monitoring and ineffective internal audit review. The last one is independent non-executive director / audit committee member, Kim Kim Fyung and Shukri bin Sheikh Abdul Tawab. Their role was to review internal control system and as a check on executive director. Both were later charged by the SC for failing to prevent the company from making misleading statement in its financial reports. That's all from me. Thank you.
Assalamualaikum, my name is Siti Aisyah binti Ibrahim Ramsa and my matrix number is 06D8023A1034. So, now I will presenting about the corporate governance issues in Transmil Group Berhad in 2007. So, the first issues is falsification of financial statements. The company's CEO, Gan Boon Aun, and CFO, Loh Chok Ping, intentionally overstated the company's revenue by more than RM 500 million between 2004 and 2006. They create fake sales invoice to make Transmil look more profitable. This violates the principles of integrity and transparency in the Malaysia's Code on Corporate Governance (MCCG). The second issue is weak board oversight. The chairman Tan Sri Razak bin Ramli and the board of directors failed to properly supervise the management. The board relied too much on information given by executive directors and didn't verify the accuracy of financial reports. This shows a lack of independence and poor control by the board. The third issue is ineffective audit committee. The committee's members, Soh Chin Tet, Chin Kim Feng and Shukri bin Sheikh Abdul Tawab failed to detect false accounting entries. They did not challenge the management or cross-check documents with auditors. Because of this, the Securities Commission later charged all three of abetting the company in issuing misleading financial statements. So the next one, the fourth issue, is breach of Bursa Malaysia listing requirements. The company's management and board submit false and misleading information in their quarterly and annual reports. This violate Bursa Malaysia's rules that require companies to be truthful and transparent in their announcements. As a result, Bursa Malaysia suspend Transmil's share and began an investigation. The fifth issue is external audit weakness. The external auditor, which is Deloitte and Touch, give a clean audit opinion which is unqualified on the company's false accounts. However, after further review, Deloitte withdrew the opinion and reported inconsistencies. This shows a failure in professional skepticism and reduced public confidence in the external audit process. The last one is lack of accountability and ethical leadership. The CEO Gan Boon focused only on maintaining the company's image instead of being honest with shareholders. His leadership lacked integrity and accountability, which damaged the reputation of both company and Malaysia's corporate governance system. So now let's move to the CSR issues found in the Trustmine case. The first CSR issue is violation of stakeholder trust. When the fraud was received, investors suffered heavy losses. Employees lost their jobs and suppliers lost confidence in the company. This shows the company failed to protect the interests of stakeholders. The second issue is damage to corporate reputation. The Transmile scandal became one of Malaysia's biggest corporate fraud case. It damaged not only Transmile name but also the overall trust in Malaysian corporate governance and reporting practice. The third CSR issue is failure in ethical and social responsibility. The companies ignore social values such as honest, fairness, and accountability. This behavior caused the public and investors to lose faith in the company's integrity. In conclusion, this case teaches us that good corporate governance and ethical leadership are very important. Companies must always act with integrity, be transparent, and take full responsibility to protect their stakeholders and maintain public trust.
Good morning, madam. My name is Tanisha Gunasegren. My matrix number is 06DAT23F1031. Today I'm going to talk about the roles of the auditors. The first will be Deloitte and Touch continues to hold office as Transmile external auditor until the next annual general meeting is held. The second is a special audit carried out by Moore's Rowland Risk Management later found that it had severely overstated revenue and asset going back to 2004. The third is the auditor's main role was to check if Transmile Group Berhad's financial statements were true and fair. The fourth is the auditors were responsible for identifying any false or misleading information in the company's accounts. The fifth is the auditors had to stay independent and not be influenced by the management of Transmile. The sixth is they were also expected to ensure that the company followed proper accounting rules and standards. The seventh is they were tasked with evaluating internal controls to ascertain if the organization possessed an adequate system for preventing and detecting fraud. The eighth is auditors also had to maintain professional skepticism, meaning they shouldn't trust information blindly and must verify evidence.
Hi and Assalamualaikum warahmatullahi wabarakatuh. My name is Nofar Kalisa binti Zubir and my matrix number is 0608223F1046. I want to present about issue and implication in Transmile case. So first issue is overstate revenue was likely to have induced market investors to purchase Transmile shares as the company had a reported stellar performance for that year. Implication. As a result, Transmile suffered losses 126.3 million instead of making profit 157.5 million. So second issue is Transmile external auditors at the time known as Deloitte and Touch queried the Chief Financial Officer CFO about certain transactions involving 20 purported customers. Implication, according to Deloitte, these transactions not only lack economic justification but also supporting documentation. So the third issue, Gunn attended Transmile's 37 Board of Directors meetings, so during which the unaudited 4 quarterly board results were approved by the board, despite his knowledge of the transactions involving the 20 purported customers, he did not raise the issue highlighted by Deloitte to the board. Implication, as a result, it was proven in court that there was a several meetings convened by audit committee and the board, which attended by the Gunn, but he failed to highlight the audit concern raised by Deloitte. So the last issue is directors and management failed to provide accurate financial reporting, weak oversight and internal control failures within the company. Implication, the scandals caused investors and the public to lose confidence and trust in company's management and financial reports. So that's all from me. Thank you.
Now let's see the recommendation. There are 4 recommendations. The first is strengthening governance structures. The second is enhancing internal controls and audit processes. The third is improving transparency and stakeholders communication. And the last is reinforcing CSR initiative. Let's see about strengthening governance structure. Okay, it means implementing more internal controls and ensuring independent oversight to prevent future irregularities. The second about enhancing internal controls and audit processes, establishing clear protocols for financial reporting and regular internal audit to detect and address discrepancies promptly. And the third will be improving transparency and stakeholders communication. It means regularly updating stakeholders on financial health and governance practices to rebuild trust. And last is about reinforcing CSR initiatives. It means balancing governance reform with active CSR program to demonstrate commitment to ethical practices and social responsibility. That's all from me. Thank you.
Hi everyone, my name is Tilosh Nasri Rajendra. My metric number is V8023F1147. Now I will be presenting reflection on the Transmile Group Berhad according to the accounting scandal. I will focus on 4 important lessons we can learn from this case. The importance of professional schemes in ethical decision making in real cases situation. Okay, first, importance of professional criticism. Auditors and accountants must question the reliability of all information, especially when figures look too good to be true. In Transmile case, the management reflected sales went unnoticed for years because the financial data was accepted at face value. This teaches that auditors must always verify supporting evidence and remain skeptical even when dealing with senior management or long-term clients. Okay. From this, professional criticism means that auditors don't automatically trust the information given to them. We always ask, does this make sense? Is this their proof? In Transmile case, management reported very high sales figures that seemed fine on paper, but auditors and others didn't check the supporting evidence carefully. This allows the inflated numbers to go unnoticed for years. From this, we learn that auditors must always verify evidence and remain skeptical even if the data comes from experienced manager or long-term client. This is critical for maintaining accuracy and trust in financial reporting. Okay. Second, ethical decision making in real situation. If I were part of the audit community or an auditor, I would ensure that unsurely large receivable or unexplanation transaction are properly investigated. This means having the courage to raise thought questions, request document, and even delay approval if evidence is unclear. Being unethical sometimes means taking improper decision to protect public trust. Ethical decision making is about choosing the right action even when it's difficult or unpopular. If I were auditing a company I like a Transmite, I would choose attention to large receivable or unexplaining transaction and making sure they were properly investigated. This could mean asking thought questions, requesting reporting documents, or even delaying approval until the information is clear. Sometimes being ethical means taking decisions that are unpopular with management, but it is necessary to protect public trust and ensure financial statements are reliable. Fourth is on shareholders and stakeholders. When Transmile Ford was exploded and investors lost millions, the company's reputation was destroyed and employees suffered. This shows how one act of dishonest can break stakeholders' trust builds over years. As future accountants, we must understand that every numbers we verify represents someone's investment and confidence. When Transmile Ford come to light, it had a huge impact on everyone involved. Investors lost millions, the company's reputation was seriously damaged, and employees suffered from uncertainty and job insecurity. This teaches us that one act of dishonest can destroy years of trust built with shareholders and other stakeholders. As future accountant, we must remember that every number of verified is not just a figure on a page. It's reputation on someone investment, they are trust, they are confident in company. Okay, fourth, integrity. Auditing standard like ISC 230 audit documentations and ISC 240 for fraud responsibility guide auditors, but technically knowledge alone cannot prevent fraud. Ethical judgment, integrity, and professional courage are equally important in encouraging reliable financial reporting. Standards like ISC 230 and ISC 240 give auditors guidance on documenting or auditors and identify fraud. However, technique knowledge alone is not enough to prevent dishonesty acts. Auditors always need ethical judgment, integrity, and professional courage. Without those qualities, even the best trained auditor might overlook or fail to challenge fraudulent activity. This shows that integrity is just as important as technical skills when it's come to providing reliable financial statement. Okay, the next slide is the executive summary. In 2007, Malaysian airline cargo business Transmile Group Berhad was embroiled in a significant accounting controversy. The company inflated in revenue by approximately by 530 million in 2005 and 2006. This misleading reporting made the company appear profitable when it was actually facing significant losses. When the external auditors evaluated the financial statements, they discovered inconsistencies and unsustainable bills, which is resulted in a restatement of earnings. This controversial caused a huge drop in the company's share price, damaged its reputation, and led to investigation by Security Commission senior executive, including the CEO and CFO, were later changed for providing false and misleading financial information. Okay, so in simple terms, this means Transmile looked successful on paper, but in reality, the company was losing money. The management had manipulated the accounting to make their financial results look better than they actually were. When the auditor reviewed the financial statement, they found out that the company's reported revenue was not supposed to be real transactions. As the result, investors lost confidence and share price dropped sharply, and legal action was taken against the company's top executive, including the CEO Gan Bon-han and CFO Al Go-han Woo. This case highlighted how important honesty, properly auditing, and strong corporate governance are in maintaining a company's integrity and investors' trust. Thank you. That's all from us. Bye.